Chainlink Whale wallets hit all-time high of 805, up 8.2% in a month. Chainlink Whale wallets holding at least 100,000 Link reached a record 805 on May 25, 2026, an 8.2% increase over the prior month, according to a Cointelegraph post citing on-chain analytics. The reading sets a new ceiling for large holder participation in the Oracle Network's native token, even though Link price action has stayed muted alongside the rest of the market. For context, the broader crypto tape is in fear territory. Bitcoin sits at $76,521, 0.7% on the day, ETH at $2,092, 0.5%, and the Crypto Fear and Greed Index reads 39, all as of May 26, 2026. Against that backdrop, the Link whale count climbing to a fresh high is a divergence worth noting. The wallets adding size are not chasing a rally. The 100K Link threshold matters. A wallet holding 100,000 Link is sitting on roughly $1.3 million at current spot, assuming Link trades near its recent range. That is not a retail bracket. It captures funds, treasuries, and concentrated individual holders whose decisions tend to lag headlines rather than front-run them. 805 such wallets is small enough that each addition moves the needle. A 60-wallet gain in a single month, which is what the 8.2% jump translates to, suggests coordinated entry from a cluster of larger participants rather than a few outsized buys. The pattern is consistent with treasury or fund-level positioning, not opportunistic accumulation by a single buyer. Accumulation without price lift. The dynamic to watch is the gap between whale count and price. Link has not staged a breakout in May 2026, yet the top tier of holders keeps adding. Two readings explain this. First, accumulation in flat tape is cheaper than accumulation into strength. Funds with conviction tend to scale positions during low volatility windows because the slippage is smaller, and the exit optionality is preserved. Second, the Oracle category itself has been quietly rebuilding. Tokenized real-world assets, an area where Chainlink supplies pricing and proof-of-reserve services, continues to expand. Tokenized credit alone crossed 1 Bs in 185 days, and tokenized equities have pushed past 1.6 B in market cap, with Ethereum holding 41% share. Each of those flows touches infrastructure Chainlink is positioned to serve. The caveats whale count metrics are an input, not a verdict. 3 caveats apply. Wallet counts are not the same as float concentration. A new whale wallet could be a custodian moving inventory across cold storage addresses, not a fresh buyer. Glassnode-style entity adjustments are needed to clean that signal. Whale accumulation has been a leading indicator in past Link cycles, but it has also been wrong. In 2022 and again in mid-2023, large holder counts climbed for weeks before the token underperformed peers. The current macro tape is hostile. Bitcoin is contending with demand metrics turning bearish, and the Fed's April minutes flipping the rate-cut trade into a hike-risk problem. Mid-cap alts, including Link, have less room to decouple from BTC in that environment. Spending-side implications for users of crypto-funded spending products. The Link Whale Red is more of a structural signal than a trade. Cards that route through stablecoin rails or that allow yield-bearing collateral are increasingly tied to Oracle integrity. Since pricing feeds gate everything from real-time conversion to collateralization checks on lending-backed cards. Healthier whale participation in the dominant Oracle network is, on the margin, supportive of the rails that funding-side crypto card flows depend on. That is not a reason to hold Link in a card wallet. Spendable balances belong in stablecoins or in tokens with deep liquidity at the issuer level. But it does mean the back end of the stack is getting reinforced while the front end optics stay quiet.